watching Top Cap Picks. It's a very quiet sort of day. Yesterday we had the first signs of a bit of a pullback. Today, let's also get in the management of Ramky Infra. The promoter is joining in. Sanjiv Iyer, the CFO, in fact, I believe, of the company is joining in. Sanjiv, morning. Thanks for joining in. It's been a very quiet listing for your stock, below issue price. What can you tell your shareholders about the kind of growth rates you're projecting for the company?
See, thank you very much to keep us on the show, and yes, it has been a quiet listing, but we as in the Ramky has always been feeling it's more a fundamental stock, and what we are looking at is, you know, the domain size is pretty vast. The order book is extremely good at about 12,000 crores, very well diversified portfolio, keeping in view our strategy to have focus on water, wastewater, where we are a spearhead, is our spearhead sector. We have our presence in road with about 30% there, institutional buildings, we do power, T&D. So I think there will be a clear spread, and going forward we should be very clearly with the kind of processes we have built for execution, which is the key challenge in the sector, and the way we manage our working capital. And with a focus on return on equity, I think with all these fundamental principles in place, I am looking forward to strong growth for the organization.
So you did sales of 2,000 crores in FY10 on a profit of 104 crores. What are you hoping to close out FY11 with?
Yes. Yes. I won't like to pin a number at this moment, but I could tell you one thing is with this kind of order book position, the company is moving forward and should be able to cover more than the 16% increase in the EPA, 16% increase in the share capital. So it should be able to maintain its EPS.
Okay, so would it be safe to assume that you would be able to grow at least at a 30 to 40% clip during the duration at which you're executing your order book?
Absolutely. I think, you know, we've been doing a great CAGR, and we have no reasons to believe that we shouldn't be able to do that.
Over what period of time are you hoping to execute this order book, Sanjiv?
See, generally we are in this light civil infra, and generally is about 2.5 to 3 years. Internally, we always take a stiffer target of completing it within 2 to 2.5 years, and that's what has been our forte, and that's how we have been maintaining higher PAT margins of anything upwards of 5%. I think we would continue to do that, and with about 12,000 crores, we have clear visibility of over 2.5 to 3 years of execution.
So, give me a rough sense of where this order book is split up. Does the government actually account for 80-85% of this order book?
Indeed, yes. The sectors we are in are mostly contributed to the government sectors, and as you see, most of these are, we are very much revenue, we prefer to work on a revenue and collection centered model, and prefer to focus on our forte, which is execution.
Okay.
And the sense is basically we have a 30% in water, wastewater, 30% in roads, roughly about 18 to 19% in institutional buildings with government, basically agricultural, university or triple IT complexes or hospitals. And we are looking at somewhere around 7 to 8% in power sector. And we have a small order book position internally for industrial estates, for polluting industries, roughly at about 2 to 3%.
I was speaking to another company that had just listed along with you a few minutes back, and they in many ways had a very similar story to yours. They were in the power space, you are in infrastructure, construction and water management, among other things. But both of y'all didn't land up getting any major subscription numbers. The best you were able to manage was about 5 times on QIB. There was virtually no retail participation, no HNI participation. Why do you think that is? The question I asked your colleague from the other company was, is there a concern in the investor community about discounting cash flows to future levels because they don't want to take the hazards of, you know, delays, regulatory approvals, execution risks, all of that, when they have listed peers to choose from? And you think you suffered on account of that?
I won't say so. Basically, you see, this is an infra space, and people who understand this space and distinguish the company versus the various peers which are there in the space would tend to invest in this stock on a long-term basis, and QIBs have understood that based on the various cash flow scenarios. As far as retail and HNI is concerned, there was, I think, a lot of bunching up of issues at that point in time, and probably we also closed out on the same day as the QIBs. Didn't give the reasonable time to the retailers as well as HNIs to take a call based on the subscription numbers. At this moment, as you know, people tend to rely on the homework done by the QIBs with regard to the companies and then take a call. So probably a day extra, I would say, in our case, would have given us a better subscription.
You have a debt of what, 130 odd crores? Am I right on that? At the end of FY10?
No, we have a debt on a standalone at about 475 crores.
Okay.
And a net worth of 425 crores as of 31st of March.
Okay. So how much of the proceeds that you have raised of about 530 crores will go towards retiring this debt?
Basically, I would split it into two. The debt, pure debt in the form of project loans are very small in the 475 crores, and we are retiring about 25 crores of that. The balance amount obviously will about 175 crores has been taken in for working capital enhancement, which immediately will go into the cash credit account and sit there until the fund is fully utilized going forward.
Can you give me a rough sense about your pipeline? While you've told me about your current order book, what's the pipeline looking like? Are you bidding for any significant government orders or any orders from the private sector that your shareholders can look forward to?
No, basically, as I mentioned to you, we are in a sector space as far as our construction business is concerned on with the government, especially since it is mainly water, wastewater and municipal sewerage and water treatment plants, as well as the complete infra space. So it is basically with the municipalities. And there is quite a bit of pipeline. As you know, sanitation is one of the key significant investment which government is doing. As far as the roads are concerned, we are also building assets. So there will be a significant orders which have already come in the pipeline. One, we are doing the Jorhat-Shillong and the SPVs with ITNL. We are doing the Atanki-Narkatpally toll-based road, backyards of Andhra Pradesh, which is again with ITNL. We recently got one major road project in Srinagar-Banial region with a Chinese partner called JTEG. So these are key projects which are there, and going forward, keeping in view our philosophy of making an order book which basically centers around ensuring that we have secondary source of funding, and based on the capital allocation, where we normally ensure that not more than 33 to 35% of our capital is blocked in any one project, so that it gives us a turnaround of about 3 times, is what is the fundamental basis on which we will go and pick and choose our orders. And I would say creating an order book at this moment though challenging, doesn't look very difficult.
Good luck with your plans, Sanjiv. Appreciate your time this morning and all the best with your plans going forward. That's the management of Ramky Infra.
Thank you so much. Thank you so much. Thank you so much.
Sure. Stock still down about 13%. We're going to take a break. Up next, the management of VIP Industries.